Joining us for a closer look at what's playing itself out on the market scene is Viv Govender from Rand Swiss Offshore. Thank you so much for your time, Viv. It may seem like from the inflation figures that we have gotten so far, including the producer price index that came out yesterday out of the US, and also in the UK, inflation coming out cooler than expected. Our markets are kind of expecting a better picture when it comes to the consumer inflation in the US that we are getting this afternoon.
Yeah, I think the US consumer inflation number is expected to be relatively good, and I think that's probably going to reinforce what we're going to see in terms of a rate cut chances for September. I think right now it would take a surprisingly high number for us to basically see, that no rate cut in September for the US. That being said, I mean, you look at the German wage inflation figure that came out, over 5%. Normally that's what's called a second round effect, where you see the initial inflation causing wages to increase. The wages are the long-term, driver of inflation or stable inflation or high inflation, let me say. Because what happens is you can have oil prices going up and down 10%, no problem. You do not see wages dropping 10%, 20%, like you see every other commodity, or even sometimes shelter dropping to 10%. Hardly ever see wages dropping significantly ever. And once inflation, rises, and once you set a bar of what increases are going to be likely to be, workers get used to it. You get a few years of, like, say, 3, 4, 5% wage increases, and the workers are expecting 3, 4, 5% next year as well. And so I think this is a dangerous thing to look at. The Reserve Bank, so the ECB, has said that they don't think this is a important issue. They think it's a catch-up effect, which will be a once-off kind of thing. But I still think it is, historically an important factor with wages to start rising as much as they are in Germany at the moment.
We'll talk about danger. We do know that the PGM pricing cycle is where the danger has been for quite a while. Northern releasing a year-end update today, posting an increase in production, but really the dark spot was in that PGM pricing. So much pressure that they expect their headline earnings per share to slump by as much as 86.6%. We did see that share price there edging lower by almost 4%. Valid reaction from the market?
Yeah, I do think so. I mean, I've always said when it comes to commodity producers, you hardly ever see them really make huge mistakes on operations. They generally are pretty good with regards to that. Unfortunately, they are totally at the mercy of what's happening with regards to the commodity prices. And I do think that that's what we're seeing here. I mean, for younger people, you may not remember this, but there used to be a time when platinum was considered to be much more valuable than gold. You know what I mean? Look at the platinum price right now, look at the gold price, and it doesn't seem like it was, but there was a time when the platinum medal was beyond the gold medal. The platinum record is beyond the gold record. That's why we have those kind of, denominations there. So platinum has fallen significantly, and the reason is quite simple. It's electric vehicles. It's basically better recycling. It's better technology. And platinum, despite its appeal as a precious metal, is primarily an industrial metal. Mostly used, or the biggest use for it, is in catalytic converters for internal combustion engines. And I think that demand is long-term, falling. Electric vehicles are taking off. If not Tesla, it's stuff coming out of China. It's stuff that's happening in other parts of the world. And I think in 10, 20 years' time, the demand for platinum will be significantly lower than what it is right now. And it's never a good sign for any commodity.
Well, I mean, talking about gold versus platinum, we did have an update from DRD Gold today, and I was actually looking at the share price movements of the different gold counters. DRD Gold is actually trading in the red, while Goldfield is the leading gainer on that front. Even Anglo Gold Ashanti is trading in the green, and I guess maybe markets are reacting to DRD Gold's update. So they said that they expect their headline earnings per share to either slump by as much as 1% or to grow by as much as 9%. For me, I mean, these numbers are quite subdued, looking at the fact that the gold miners have benefited from the higher gold price. Is there maybe just a dark spot there operationally?
Yeah, I mean, this is probably the exception to the thing I said before. Like, usually you don't find operational issues really, significantly affecting them. They're much more vulnerable to changes in commodity prices. They've been the big driver for most, commodity producers out there. In this case, it's kind of the opposite. We have seen a production miss here, and I think that is one of the reasons we are seeing a DRD under pressure. But like you said, the commodity price is high, and if you maintain kind of the increase we've been seeing, the operational stuff, I think, will to some extent, be overcome. But yeah, in this case, it was an operational production miss by DRD Gold that caused this disappointment.
Yeah. All right. Well, let's go into education. Adver coming out with an update, a voluntary trading update today. Gave no color at all in the update. All we know is that the bottom line is expected to be between 13 and 18% higher than the prior comparative period. Would you care to fill us in on that and maybe school us on the expectation for those higher earnings?
Yeah, look, I mean, the one thing in South Africa, unfortunately, is that the failure by government has meant there's a lot of opportunity for private sectors to basically step in and do certain things, like, in the schooling sector. And Adver has always taken advantage of that. And, as you see from those jobless numbers that come out, you can't afford for your kid to have a bad education because, it's not exactly like, you can just graduate high school and basically find a job in this environment. You have to do more than that. So it kind of makes sense demand is quite strong for it. Like I said, there's not much color here.
Yeah.
The fact they're seeing this increase that's coming through should indicate that maybe there's some stability in the consumer. On the other hand, it could also just be the fact that of the disaster in the public education sector.
Before we get to the stock picks that were chosen by your industry peers, I quickly want to take a look at MTN Rwanda. I'm not sure if markets really reacted to that. I did see the share price up by 1%, so releasing interim results there. The top line seemed okay. Subscribers increased their service revenue up by almost 1%, but then a decline in the core profit, a decline in profit after tax. It just seemed that the more you went down to the bottom line, there was just pressure that was seen there. And I'm not sure if maybe the markets didn't really react to that because of the size of Rwanda compared to the rest of the portfolio in MTN.
Oh, yeah, most certainly. I mean, MTN has operations in many parts of the world. South Africa, Nigeria are probably going to have more of an impact than Rwanda does. Profits after taxes, like you said, fell almost 2/3. But this is like a write-off of some asset, valuations, etc. And so I do think it's disappointing, but it's like not going to be a material effect there. I think MTN's approach in terms of going to places that other people have not gone to, and has to some extent borne fruit, but also have come with some dangers as well. There's reasons people avoid some parts of Africa, like for instance Nigeria, and other parts of the world like Iran and so on. But I do think that with regards to this, it's likely too small to make a material impact on the share price.
All right. Well, Viv, let's take a look at the stock picks that your industry peers have found favor with.
I'm picking an offshore share again, one that's listed in the US, but it's a Cayman Islands company with significant operations in China, PDD Holdings.
Okay.
They've got a big platform in China where it's group buying of agricultural products that really has grown from nowhere to becoming a very big buying platform in China. And then South Africans might know the platform they then launched internationally called Temu. So if you buy anything off Temu, you are effectively a customer of PDD Holdings and their app, which connects the producer or manufacturer of whatever products you are buying in China directly to the purchaser in all kinds of different countries around the world.
Today I'm going to stick local, and I recently saw the results from Nedbank, and this is a business that it started to impress me. I know the share price has moved quite a bit, but historically they seem to have a problem around their property portfolio, and they didn't have such well-developed retail and investment banking, but that's changing. They've got a new CEO. They seem to be well geared to any improvement you have in SA. They don't have the hedging issues that other banks have. And remember, they also don't have the Africa exposure. So if you're a little bit nervous about African exposure and you're looking for very focused SA exposure from a banking perspective, especially if you expect GDP growth to recover over the medium term, I think Nedbank should be something that you seriously consider.
I'm going with process. Ultimately, when we do talk about process, we have to talk about Tencent, because Tencent is the ultimate driver for the value that we see in process. So just looking at Tencent, there's strong drivers there in terms of its gaming revenue, which has come through a period of regulation. We've seen the Chinese government starting to allow new games to be put through to the market. And then secondly, you've got the advertising revenue, which is coming through on Tencent side, which is a higher margin business for the Tencent stable. So they will be able to grow earnings in the double digits. Their return on equity is also close to 20%. And ultimately for process, it makes up 70% of their revenues, but over 100% of their earnings, given some of the other businesses within the process table that are still loss-making.
All right, Viv, so PDD Holdings, Nedbank, and Process. Let's actually start off with PDD Holdings, which is the owner of the online phenomenon, Temu.
It's PDD, I think PDD, that's what the PDD stands for. Forgive the pronunciation, right. But yeah, look, this is an awesome kind of idea, and I was hoping something like this comes to South Africa. Basically, what it allows you to do is to buy directly from the farmer. Let's just say you want a particular kind of, quality in terms of your apples or whatever it may be, a particular kind of quality in terms of the products you want to buy for food-wise, and you can make a deal directly with the farmer instead of going to the shop and getting food from wherever. You find the highest quality producer out there you can find, and you can buy from them directly. A great idea, great app, I think great business. The only issue I'd have with it, I think there's a class action lawsuit that's possibly on the way because of there's some issues that might be occurring with the platform. China's issues with regards to forced labor, and China's issues with regards to malware and so on in some of their apps, spying and some of their apps could be an issue here that might affect pricing. But I think as a business itself, it's very good. Nedbank, obviously very cheap at the moment, but all the banks are cheap at the moment in South Africa. If you look at the dividend ratio, dividend ratios, look at the PE ratios as well, you're finding that these things are being priced with some really pessimistic views on South Africa's future. And I think if this doesn't come to play, these are incredibly cheap things to buy at the moment. But you have to have a more optimistic view of South Africa, I think, that the market has at the moment.
And Process are also another exposure to China, and particularly quite interesting. I recently had a conversation on the new CEO buying up more stock, buying up stock in Process.
Yeah, look, I do think, again, China, great opportunity. I think some of the setbacks they've had around AI has kind of produced, an internal ecosystem that might be strong enough to overcome some of the sanctions that they've been experiencing. And so we are seeing, for instance, Huawei come out with new chips, and we're seeing the developments around, electric vehicles and stuff happening in China. So that's very interesting, being boosted by the sanctions. The thing with sanctions is that often you find that they do either one of two things. If you're small, they crush you. If they're big, they make you stronger because, you're kind of forced to do your own internal production. And so I do think the Chinese tech sector is, due for a bit of a revival. Okay. But like as was mentioned in this segment here, very vulnerable to the government. What was the reason, you saw 10-cent fall? One of the reasons we saw 10-cent fall is because the government basically said, like it was said, they didn't approve some games going through. There was a big crackdown on tech, a few years ago. If it changes, we could see a nice recovery coming through. But we are kind of vulnerable to what the Chinese government wants to do, and that's kind of adds an extra layer of risk to it versus, say, some U.S. companies that you might want to buy in the same sector.
All right. Well, Viv, let's get to your stock pick for today. What will it be?
Okay, my stock pick is CrowdStrike. It's fallen dramatically. I do think it is a valid reason for falling. It was one of the reasons we had that, one of the primary reasons we had that big crash in Microsoft and some other systems, a few weeks ago. It's fallen significantly, well more than 40% from its highs. That being said, you look at the valuation of the company, just about $60 billion or so. They look at something called Wiz, which was another kind of security company out there, and it turned an offer of $19 billion from Google because of they thought it could do better in the market. I think if you look at the AI kind of environment going forward, with cloud computing being very important, security is going to be a very huge issue. I think CrowdStrike is probably going to be well suited to take advantage of that. And right now, it's one of the few things in the sector that's probably going at a bit of a discount.
All right. Well, thank you so much for your time and for your insights today, Viv. Much appreciated. That was your midday market update with Rand Swiss Offshore's Viv Govender.